Guys, this is S&P 500 weekly technical analysis for the week of May 28th. Because of the recent heavy bullish movement in the entire US stock market, S&P 500 was expected to continue to move up, but because there was a problem in the Dow Jones, the upward movement of the S&P 500 was not supposed to be easy. Now when looking into the charts, it might look like that the S&P 500 is moving up or is trying to move up, but in actual it is consolidating. The question is that why the S&P 500 is seen as consolidating and not as trading bullish. The reason is the Dow Jones, because there is a clear bearish side movement in the Dow Jones, whereas S&P 500 is trying to move up. So there is a tug of war between S&P 500 and Dow Jones, and this tug of war is actually leading to the consolidation. Other than that, the movement of the S&P 500 is clearly range bound, so that is another indication of the consolidation. So I will discuss all of these, the numbers, the levels, each and everything in this S&P 500 weekly technical analysis. So guys, before I discuss the agenda and the technicals and the levels, etc., let's take a quick recap of what I predicted in the previous week and what actually was seen in the US stock market. In my previous S&P 500 weekly technical analysis, the whole point of the discussion was 5265. What was 5265? It was the previous or the recent all-time high level. And as per the rule that I have talked about in detail in that the previous S&P 500 weekly technical analysis, as per the rule, once the S&P 500 breaches its all-time high level, then it will have to come down to respect that the level, and then it should survive, and once it survives, then only it will move up. And here I have clearly discussed the conditions for the bullish and the bearish movement. However, you will say that okay, 5265 was there, it was respected and it did work as it was anticipated, but what about Monday, Tuesday, Wednesday, Friday, etc.? There was very limited movement, up, down, very limited movement, then a fall, then a reversal. So was it predicted? Yes, it was predicted through these the daily updates which I give to my Patreon community members. This was the second update on May 20th, Monday, and here in this the second update I've clearly mentioned that considering the movement and everything in the S&P 500 as well as in the Dow Jones, we are expecting that the S&P 500 will trade in between the two levels for the rest of the day. So whatever we have seen here, it was mentioned in these the updates which I give to my Patreon community members. So whatever happened in this the previous week, it was expected, it was anticipated, and it moved. The S&P 500 moved as per the expectations. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let's discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart of the S&P 500, there is a doji candle. Okay. On the weekly chart of the Dow Jones, there is a very heavy bearish candle. Both of these candles are indicating a reversal or a fall or a short-term break in this the bull movement. Okay, I will show you on the weekly chart. Weekly chart means the big picture. Point number 2 of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, S&P 500 failed to clear. Okay, this is the previous candle, and in terms of the Dow Jones, you can clearly see okay, red, green, red, red, and then the technical, this the bearish candle. Okay, all of this indicating okay, more fall. So I will discuss the technicals, candles, okay, here on this the daily chart. Daily chart means the short-term picture. Point number 3 of the agenda is the probable movement of the S&P 500 from May 28th, which is Tuesday, to May 31st, that will be Friday. So in the next week from Tuesday to Friday, whatever is going to happen in the S&P 500, I'm going to discuss here in this the last point of the agenda. So guys, now I'm going to begin with the first point of the agenda, which is the S&P 500 technical analysis on the weekly chart. So let's discuss the weekly chart. Now guys, we are here and this is the weekly chart, W as in weekly chart, and here I'm going to discuss the first point of the agenda. Okay, and weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So guys, before I begin, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily and the precise updates of the S&P 500 from Monday through Friday, each and everything every day, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now on the weekly chart, let's first analyze the candle. It's a bullish doji. What? A bullish doji. Okay, so whenever we see certain candles, okay, see there are many types of candles, but some candles are very important, and if those candles are seen on the weekly charts, then it becomes more important. Okay, now here it is a bullish doji. So what does this the doji candle mean? Doji means a reversal. Okay, this is not a short term like 1 hour or 1 day fall. No, doji means a reversal. Okay, this is what we know about the doji. Okay, and a doji candle will form when the open price is equal to the closing price. Okay, now when we consider this concept, open price is equal to the closing price, then it is for the daily candle. Okay, but when we look into the weekly candle, and if there comes a difference of 1 point or maximum 2 point, then also it will be considered or it will be seen as a doji candle. So here bullish doji and the candle means a reversal. But if we consider, okay, the consolidation on the daily chart, okay, so what will happen? Even though it is indicating a reversal, but because there is a consolidation on the daily chart, this means that even if the S&P 500 comes down, its downward movement is expected to be little or normal or restricted. So I will discuss more of this in detail in the last point of the agenda. Now yes, this thing in the Dow Jones, if you look into this, the last weekly candle of the Dow Jones, okay, then this particular candle is a heavy bearish candle. And if you notice a pattern, okay, there is a pattern. If you notice a pattern, okay, so what happened? Then for the next week there was another very heavy candle. So if the pattern is repeated, then there will be another heavy bearish candle. And you can see exactly the same thing here in my final update on May 24 to my Patreon community members. The closing of the Dow Jones below this heavy resistance level, okay, which was earlier acting as support, means there is a heavy bearish candle on the weekly chart, and this candle is similar to the weekly candle of April 1st, and if that pattern is repeated, then in the next week there will be another heavy bearish weekly candle, and in the entire US stock market, okay, so everywhere, okay, there will be a candle, okay, of this the similar pattern. Now this was the week of April 1st, this was the week of April 8th, and if this is repeated, then what happened here, okay, in the S&P 500, this was week of April 1st, this was week of April 8th. Okay, so everything will be clear on Tuesday. Okay, so the kind of closing will be seen on Tuesday. It will tell us whether the Dow Jones is going to see, okay, this kind of movement for the entire week, okay, or will give this kind of candle or not. And then similarly, okay, we'll come to know about whether the same is going to happen to the S&P 500, whether it will come out of the consolidation or not. Okay, anyways, whatever will happen, I will keep you posted through these the daily updates if you are my Patreon community member. Now let's discuss the technical indicators. In terms of the technical indicators, again, okay, last time also I've repeated this thing. As of now, okay, if you notice, this is bullish, Ichimoku, moving averages, everything is bullish, and the MACD of the S&P 500 on the weekly chart was trying to give a bullish crossover, but because of the formation of the doji candle, we can clearly see that there is some reluctance in the MACD. MACD is still trading bearish, and that is the problem, that will be the problem and will remain as is. And the same thing I mentioned in my previous S&P 500 weekly technical analysis, that only MACD is more than enough to bring the market down or to push the market up. Means if all of the technical indicators are against, but if the MACD is saying bullish or bearish, then we can see that kind of movement. That's not a problem. So MACD is bearish, stochastic RSI is bullish, and saturation and overbought, normal. So what it means, this means that the S&P 500 is 80% bullish on the weekly chart, as well as overbought, as well as saturated. Now in terms of the Dow Jones, if you notice, Dow Jones on the weekly chart, again moving averages, moving averages, and then Ichimoku cloud, and all of these are bullish. There are two problems, or three problems, two or three you can say. What is that? Number one, MACD is still trading bearish. It was trying to go bullish, it was trying to give a bullish crossover, but because of the formation of this heavy bearish candle, the bearishness is going to continue. And we are not expecting a bullish crossover next 1, 2 or 3 weeks. Rather, we are expecting the bearish movement to continue. And if you look into the stochastic RSI was trying to go bullish, or it was going bullish, but because of this heavy bearish candle, it is flat. And if there comes a very limited movement on Tuesday, then on Tuesday itself there will be a bearish crossover, and then the MACD is bearish, stochastic RSI is bearish, market is going bearish. Market may not go that kind of very very heavy bearish, but there will be a very short fall. That kind of thing will be there. And again, all of these, the technical indicators. So what we can see here, in case of especially in case of the Dow Jones, that the Dow Jones looks like it is 70% bullish. Only 70%. On Tuesday it will be clear whether it is 50-50, or it will remain bullish. So all of this indicates that there is clearly a bearish pressure on the Dow Jones and the S&P 500 and on the entire US stock market. But even with this kind of pressure, the S&P 500 is 80% bullish, Dow Jones is 70% bullish. Now the next week, 4 days, Tuesday, Wednesday, Thursday and Friday. So these 4 days will clear the picture, and especially Tuesday will clear the picture, whether this 70% will be 50-50 or so, right? Now guys, I have one more information to share with you. This is my stock market knowledge transfer program, or S&P 500 knowledge transfer program. Through this program I teach the movement, strategies, trend analysis, technicals, predictions, predicting even before that thing happens, support and resistance levels, and much more. The motto of this program is to help you become self-reliant, and this program is delivered one-on-one basis. And whatever you are going to learn here in the program, this learning and everything will be applicable to any stock, any index, any currency, any commodity, crypto, or anything that is traded in the stock market. Because we are going to talk about the technicals and the movements, the patterns, etc. And this is my email address, and more information is there in the Google spreadsheet. And when you open the Google spreadsheet, then you will see that I have mentioned everything in detail, what I'm going to cover, and how I'm going to teach. And these are the options trading, live options trading, the options calculations, options strategies, everything. Then how to predict the trend, or how to deduce the trend, how to recognize these things. And then these are simple terms and conditions. These are the snapshots of the meetings. And guys, this is my email address. Whenever you want to participate, you can simply drop me an email, or if you have any questions that you want to ask, then also you can reach out to me. And guys, I have given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart, D as in daily chart. Daily chart means one candle represents one day, not 1 hour or 1 week. One candle means one day. So guys, before I begin, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these, the daily updates, the daily precise updates of the S&P 500 from Monday through Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now back to the chart. Let's first discuss the candle. It's a small bullish candle. Okay, a small or a normal bullish candle. Question is that does this small or the normal bullish candle has the bullish sentiments or not? Then no. Okay, why I am saying no? Because if you look into this, the previous candle, okay, that was so this was this was Thursday. This candle formed on Thursday. It was a very heavy bearish candle. This candle has engulfed these 5 candles. So this was very heavy candle. Okay, now on Friday the S&P 500 moved up by 0.70%. okay, however, after the formation of this heavy bearish candle which has engulfed 5 candles, there was supposed to be a very limited movement like 0.3% or 0.4% in the bull side, and then eventually it was supposed to come down to test and the 4265, the previous ATH, and then again sustain. Okay, that kind of movement. Okay, it was supposed to be there. However, this kind of movement was seen here in case of the Dow Jones, because in case of the S&P 500, Apple, Nvidia, Microsoft, okay, all of these are tech primes. They were trading 1% or 2% or 3%. Okay, very heavy. But even with this kind of very heavy movement in the tech primes, S&P 500 was it managed to move up by 0.70% or 0.60%, whereas the true technical movement was seen in case of the Dow Jones. It was relucting. It was trying to, but it was relucting. Although the Goldman Sachs was heavily up 1.5 or more than 1%, but still it couldn't help the Dow Jones, right? So yes, so bullish sentiments, okay, no. So when I say bullish sentiments, no bullish sentiments, okay, I'm not saying that people are saying that now the market is going to come down, okay, and there will not be any bullish movement. No, when I say bullish sentiments, I simply mean that if the S&P 500 try to move up, then this the upward movement is expected to be limited. Okay, but at the same time S&P 500 will have to struggle. Okay, because if there would have been good bullish sentiments or heavy bullish sentiments, in that case the struggle, okay, it might not be seen as such, and S&P 500 was supposed to move up, okay, without any problem or without any issues. Okay, now the candle. Now let's talk about yes, there is one more thing. Okay, just remember the high and low of the candle. The high of the candle was 5342, approximately 5342. Low of the candle was 5257. S&P 500 will not be able to move up unless it clears 5342 and gives a closing above 5342. S&P 500 will not come down, okay, unless it gives or it clears the 5257 and gives a closing below 5257, right? Simple logic. Now let's talk about the technicals. In terms of the technicals, we can clearly see, okay, moving averages, clear fan out, okay, Chimoku and Bollinger Bands, everything is bullish. The MACD was trying to change to bearish, but because of this 0.70% movement in the S&P 500, now MACD is a bit reluctant to give this kind of crossover. However, so MACD is bullish. However, the stochastic RSI, it came down, okay, and it is bearish. S&P 500 on the daily chart is neither overbought nor saturated. Okay, so what does this mean? This means that the S&P 500 on the daily chart is 80% bullish. Okay, clearly 80% bullish. And what we have seen on the weekly chart, it was 80% bullish. So overall S&P 500 is 80% bullish. However, this 80% bullishness in the S&P 500 might not be seen, or might not, or the impact of this, the 80% bullishness in the S&P 500, okay, might not be realized because of the Dow Jones. So why I am saying because of the Dow Jones? There are multiple factors. Now if you look into the daily chart of the Dow Jones was trading up, and then it started to come down, and now there is a clear fan out in the moving averages, but the closing is below the moving averages. Okay, so moving averages will go neutral. Okay, Bollinger Bands are still bullish, Ichimoku is bullish. Now comes the most important part. Okay, this is what we have seen on Friday, a bearish crossover in the MACD of the Dow Jones. Stochastic RSI is already bearish. Now the MACD is also bearish. The combination of the stochastic RSI and the MACD, okay, generally it defines the direction of the market. Okay, if the MACD and the stochastic RSI trades bearish, then most likely the market will trade bearish. Okay, or that particular stock or index will trade bearish. If the stochastic RSI and the Dow Jones are bullish, then okay, the market or the stock or an index, that will trade bullish. And my first update on Friday to my Patreon community members, I have cleared this condition that if the Dow Jones fails to give more than 1% or approx 1% movement bullish side by the end of the day, then the MACD will turn bearish. Okay, and it already has, because the market was in session. Okay, then this will align with the already bearish stochastic RSI, and then will force the Dow Jones and the entire market to come down, or any bullish side retrace will be limited, and whatever S&P 500 has gained or is trying to gain will be lost. So now here you can see, okay, bearish and bearish. So this is what I was talking about, okay, earlier, that now the S&P 500, okay, it might look bullish, or it might want to remain bullish. However, the Dow Jones, because now the Dow Jones is 50-50, clearly it is 50-50 on the daily chart, whereas it is 70% bullish on the weekly chart. Okay, so considering weekly chart and the daily chart of the Dow Jones, so Dow Jones is around 50% or 60% bullish only. Now Tuesday will tell us whether the Dow Jones is going to move into the bearish side, or it will remain in the bull side. Okay, Tuesday in the first hour, okay, or in the first half, okay, it will be quite clear. So the picture here we have seen S&P 500, okay, and the Dow Jones. So the bullishness in the S&P 500 will not be realized as long as Dow Jones is trading, okay, bearish or is under pressure. Okay, and if the Dow Jones remains under pressure for next 2 or 3 days, then this bullishness from 80%, it will come down to simply 50%. Okay, because, and why 50%? Because then the MACD of the S&P 500 will give a bearish crossover and game over, right? However, whatever will happen, or whatever is going to happen, I will keep you posted through these daily updates of the S&P 500 from Monday through Friday, if you are my Patreon community member. But if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And guys, there is one more thing, that along with these the daily and the precise updates of the S&P 500, I also give these the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. But if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see that there are these two tiers: daily S&P 500 updates non-US and Canada residents, and daily S&P 500 updates for US and Canada residents. So whenever you subscribe to either of these, You will be getting the daily S&P 500 analysis updates and probable movement, as well as the stock market opportunities minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily and the precise updates of the S&P 500 every day from Monday through Friday. And they are very well aware of what is expected to happen in the stock market, what will be the levels, okay, and the zones, etc. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week, which is the week of May 28th. Now here a few things. Number one, okay, so next week, okay, it will be a short week. So the most important thing which is going to happen in the next week is the PCE and core PCE data. This is going to be published on Friday. Okay, so Friday will be May 31st. This data is going to make heavy impact on the entire US stock market, and this also means that the stock market might give a very limited movement, and the S&P 500 is expected to remain range bound and in the consolidation, okay, by the time this data is released. Okay, so this is the only important data that will be released on Friday morning, May 31st. Okay, now let's discuss the numbers, levels, etc. But before that guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Okay, so one thing is clear: 5342, 5342 in the bull side, and 5257, 5257 in the bearish side. S&P 500 will not be able to move anywhere unless either it gives a closing above 5342 or a closing below 5257. Okay, as long as it is trading in between these two, okay, it will remain in the consolidation. Although the confluence zone, okay, is very tight, okay, but the consolidation, okay, we can give some room. Now this is clear. There is one more thing, okay, and it is related to 5265. Okay, again 5265 was the previous all-time high of the S&P 500. Okay, so 5265 means if the S&P 500 gives just one closing below 5265, this means that now the S&P 500 has the potential to give a closing below 5257. This also means that we might need need not to wait for 5257, because the closing is seen below 5265 means that is enough or more than enough. Okay, and I'm talking about the bearish side. But if the S&P 500 comes down, hits 5265, okay, with a little breach up down, that is okay, not a problem. Okay, but and also it manages to close above 5265. So just like Thursday, it closed at 5268. Okay, closing was at 5268, above 5265. That is why we have seen this the bullish trade. So it comes down, it hits, okay, there is a breach, but eventually the closing is seen above 5265. Then what will happen? Then more bullish movement. Okay, because in that case it will be seen that the S&P 500 has tested and has fulfilled its obligation to the previous all-time high, okay, not one but two times or three times, and was able to sustain, right? So in that case it will send a bullish message to the market. Okay, now bullish side is a little problematic. It is problematic because if you look into the Dow Jones, okay, number one, there is a doji candle on the weekly chart of the S&P 500 itself, indicating a reversal. Number two, there is a crossover in the MACD, a bearish crossover. Stochastic RSI is already bearish. Okay, so now there is a bearish combination. So this means that the Dow Jones is feeling more pressure. Okay, and also because of the formation of the last candle, which is a bearish candle, okay, a technical bearish candle. So all of this and MACD, etc., everything is saying that there is pressure on the entire market. Okay, so because the Dow Jones is feeling the pressure, the entire market will feel the pressure and the market will come down, and even if it try to move up, the bullish movement will be limited. Okay, the same principle will be applicable to the S&P 500, right? So because of the Dow Jones, S&P 500 will not be able to move much. There will be a very limited bullish side movement, rather there may come some good bearish side movement. Okay, now Dow Jones is now reaching to the Ichimoku. Okay, and you can clearly see Ichimoku is here. So whenever Dow Jones comes down, okay, it is approximately 1% from the Ichimoku. Whenever Dow Jones comes down, okay, and it hits the Ichimoku, but it gives a closing above the Ichimoku cloud, then there will be very fair chances, good chances of seeing a reversal. Okay, however, if the Dow Jones comes down, hits the Ichimoku cloud, and somehow gives a closing inside the Ichimoku cloud, okay, then inside the Ichimoku cloud will be considered as outside the Ichimoku cloud in the bearish side. Okay, this will put pressure on the entire market. This pressure will be seen or will be felt in all of the indices, and in case of the S&P 500, it will be then looking for some good fall, 2% or around the 2.5% fall. Okay, so that will be there. So now what we have seen, 5265, okay, 5342, 5257, and the Dow Jones's Ichimoku condition. Okay, because for the bullish movement to happen, the Dow Jones must sustain above the Ichimoku cloud. Otherwise, there won't be any known or not known, but there won't be any significant bullish side movement here, right? Now let's discuss the consolidation part. So we have seen that on Friday, Dow Jones, okay, it was struggling to move up. It came down, formed a technical bearish candle, and at the same time the S&P 500 was able to move up heavily by 0.70%, right? So there is surely a disconnect between the Dow Jones and the S&P 500 in some manner. What it indicates, this indicates that even if the Dow Jones comes down, the S&P 500 is already looks like that it is there. Okay, it is trading in the consolidation zone. So even if the Dow Jones comes down, S&P 500 might not be able to come down. Rather the S&P 500 is going to sustain. Okay, it will be able to sustain because there is the consolidation zone, and consolidation zone is helping the S&P 500 to sustain rather than to give up. However, if there comes a condition like this, heavy bearish condition in the Dow Jones, that will give a bearish breakout to the S&P 500. Bearish breakout means then it will be coming down and it will be looking for 5100 or so in the next few days. Okay, however, if the Dow Jones manages to sustain, okay, or it try to move up, and at the same time the S&P 500 also moves up, okay, and it gives a closing above the high of this candle or the all-time high 5342, okay, then it will give a bullish breakout. Okay, bullish breakout means in the bull direction there will be a bullish breakout. Okay, so this condition is very clear that S&P 500 is trading, okay, in the consolidation, and because of this the consolidation, S&P 500 for now it looks safe. An index or an entity can move out or can trade either above or below the consolidation zone only when there comes a breakout, because through the breakout an index or a stock, okay, they get the direction. If the breakout is bullish, means more bullish movement. If the breakout is bearish, then there will be more bearish movement, there will be more fall. Okay, so there is a condition of this, the breakout. Now, so on Tuesday itself, it will be quite clear that whether the market is heading to the bullish side or the bearish side. Okay, because on Tuesday the real impact of this, the combination of MACD and the stochastic RSI, will be felt in the Dow Jones. Now there is one more important thing thing in the Dow Jones. Okay, and this can help the S&P 500. What is that? This is the stochastic RSI. Looks like the stochastic RSI is coming down. So looks like the stochastic RSI is about to hit the saturation. Okay, means K equal to D equal to 0. This is the condition. Okay, so when the Dow Jones hits the saturation, let's say that on Tuesday there is a bearish candle, good bearish candle. Okay, and at the same time the S&P 500 has given up a little, okay, like 0.5% or just a little. Okay, but it was still sustaining at or above 5265. And at the same time in the Dow Jones, because of this the bearish movement, the stochastic RSI hits the absolute saturation. Then immediately the Dow Jones and the entire US stock market will come under a technical compulsion to give a bullish retrace. Okay, so now I cannot confirm whether it will be able to hit the 0 on Tuesday itself, or if it will take 1 to 2 more days and then a continuous fall so that it can hit the absolute saturation. Okay, because absolute saturation is a technical compulsion here in the bearish side for the stock market to move up, okay, or to give a bullish retrace. So this means that Tuesday will be important, Wednesday will be important, and a closing below 5265 is important. Okay, and other than that in the Dow Jones, this is okay, this is more important, and that whether the stochastic RSI has hit the absolute saturation or not. Okay, so we also need to look into this part. Anyways guys, whatever is going to happen or whatever will happen, I will keep you posted through these the daily and the precise updates of the S&P 500 from Monday through Friday. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. So guys, hit like if you have liked this video, and also if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So guys, this was my S&P 500 weekly technical analysis for the week of May 28th, means from May 28th, which is Tuesday, to May 31st, that will be Friday.